Welcome back. You're watching Bazaar Morning Call. It's time now for CNBC-TV18's list of top stocks for the day. And the big one, of course, is L&T, which came out with numbers post-market hours. Vivek is now joining in with the details. Vivek, how did the numbers look?
Well, good morning. Slightly mixed set of numbers coming in from L&T. This time around, the execution lagged on the back of the fact that, number one, the company deliberately took a pause on execution of Jal Jeevan projects, and also there were slightly slow-moving hydrocarbon projects that were in the kitty that got executed in this particular quarter. On the back of that, revenues higher by 10.5%, a slight miss versus our estimates. But the core EBITDA was something that surprised positively, coming in almost at 7,416 crore, higher than our estimate. And the biggest positive takeaway from the results is that the EBITDA margins have actually improved both on a sequential as well as on a year-on-year basis. Profitability impacted by the labor code provisions, but after that, if you take away that particular adjustment, profitability was quite healthy. What are the key positives from the results this time around? The core margins improved to 8.1%, 40 basis points higher on a year-on-year basis. Ex-services order inflows surprised positively much higher than even the high street estimates, coming in at close to 1.2 lakh crore. The other positive takeaways was that while the management retained both top line as well as margin guidance, implying a very steep ask rate as far as Q4 is concerned, they said that they are well placed to exceed the order inflow guidance of 10% of FY25. But on the other hand, top line missed due to slow-moving water projects and also slight worries emerging, especially as far as Middle East capex is concerned. That is something that the street will now keenly watch.
All right. Vivek, thank you very much for that. L&T, of course, is also something generally which is in focus around the time of the union budget with them in so many segments where the government, including defense, by the way, of course, it doesn't, in that sense, move the needle for L&T in the overall sense, scheme of things. But it's one of those, I mean, if I can put it that way, budget stocks. Well, M&M Finance and SBI Cards are the next names we want to focus on. Gaurav is here with details. Gaurav.
Well, as M&M Finance actually came up with a very strong set of numbers, and this is not just a one-off, it is a structural thing that has changed. First is that, let's talk about net interest income. We saw a sharp surge, and the reason being that there was a support from both interest income and fee income. In fact, management said that the fee income support will sustain because of the insurance arm. As a result, net interest margins, they improved almost by 50 basis points on a sequential basis. Other than that, management also indicated that the 9-month FY26 net interest margins of 7.1% is something that can be taken as an indication going ahead. Second is that the credit cost. Now, the reported credit cost that came down from 2.2% to 1.3%, and this was in fact in line with the management guidance because the 9-month FY26 credit cost now stands at 1.8%, and management is still guiding the credit cost to be below 1.7%, leaving further scope of improvement. Third is that the ROA improvement. We saw ROAs, management is still guiding ROAs to be in the range of 2% and above for FY26, whereas for 9-month FY26, the ROAs now stands at 1.9% because in this quarter, we saw 2.5% as reported ROA number from the company. So all in all, a very good set of number. And on the other side, if you look at SBI Cards, now, credit cost that has declined in line with the management guidance. Now it stands at 8.3%. In fact, we saw some surge in ROAs as well because of the lower credit cost. But now a new issue is coming up, and this is regarding the growth. Because if you look at the loan book growth, the loan assets growth was at around 4.6% on a year-on-year basis. Remember, earlier management used to guide 10 to 12% growth, but now they have refrained from guiding any number for the growth because they say that the asset growth will be lagging the spends growth going ahead because of the structural changes that they are seeing. Second is that the revolver as a percentage of total receivables, that is coming down, and management says that the new portfolio is also showing the same trend where revolver amount is lower than the overall spends. Now that is also something which is a structural issue for SBI Cards, and if you look at interest earnings asset as well as a percentage of total assets, they are also coming down. Third is that the cost of fund, management say that it is likely to remain same, and given all these factors, even brokerages are a bit bearish. We saw SSBC and Nuvama cutting down the target price. So that is something which can be seen in a negative way for SBI Cards today.
Okay, growth a bit disappointing. Gaurav, thank you very much for that. Garden Reach Shipbuilders rallied nearly 5.5% yesterday along with the rest of the defense pack. How did the numbers look? Ria now joins in.
Well, yes, a very good set seen for Garden Reach in this quarter, well above street estimates as well. The revenue growth of 49% on a year-on-year basis was likely driven by a ramp-up in execution for the P-17A stealth frigates as well as anti-submarine warfare. The EBITDA and net profit also increased by 128% and 74% respectively. Margins also saw an expansion of 314 basis points to 9% for this quarter. Now, in terms of the subcontracting expenses and the other project-related expenses, though those have declined by roughly 61% and 69% respectively, both on a sequential basis. And remember, these high expenses had been weighing on profitability in the previous 2 quarters. So this is a positive sign for the company as well. Apart from this, the company has said that with the next generation Corvette contract on the anvil, they are confident of ending FY26 with an order book of roughly rupees 50,000 crores. And the order book at the end of Q2 of FY26 was just 2,205 crores.
Okay, all right. Thanks a lot for that, Ria. Well, hopping across to Vinny. She's here to tell us about GE Vernova T&D. Vinny?
Hi, good morning. So very good set of numbers that's coming from GE Vernova, and in terms of revenue growth, 58% revenue growth, a beat on all fronts, whether revenue, PAT, margins, everything is beat versus what the street was expecting. Rising execution obviously is what is seen for the company, and that's why the improvement that we're seeing in terms of the revenue performance, significant improvement in terms of margins this time, margins at 26.7% versus last year, just a 16.73% as well. Order inflows, that has been stable as well. When you look at it on a year-on-year basis, a good growth of 41%, but this, do not forget that, that big South Olpad order as well during this quarter, which is not yet accounted for because there are some, transition issues or something that is left in terms of documentation. So it will be accounted for in Q4 FY26. So that's going to be strong as well in terms of order book that they have coming forward. Export orders, good. That formed around 14% of their total order inflows as well. That grew 32% on a year-on-year basis. So improvement in terms of margins is what one could see going forward. Con-call highlights, very positive there as well, because the management has upgraded their guidance for margins. They expected it to be in mid-20s. Now higher range of 20s is what they're talking about. So good over there. Export mix is been very strong for the company. Also, the company highlighted on the domestic front, they're not seeing any slowdown or concerns in terms of the TBCB orders. That's the tariff-based orders that come in. So they're not seeing any slowdown there. Only one thing that they highlighted, that some export customers which were supposed to get their orders during Q3 now have moved to Q4. That's the only delay there, but otherwise a very strong performance for GE Vernova.
Okay, all right. Vinny, thanks very much for that. Phoenix Mills is the next one in focus, and Sonal is here with details. Sonal, good morning.
Good morning, Prashant. Well, good set of numbers coming in from Phoenix Mills. Revenues up 15%. We also saw EBITDA up around 19% on a YOY basis. The margins expanded by 200 basis points and profits were up 5% as well. The profit growth was lower this time around because there was an impairment in the quarter gone by of around 25 crore rupees. In terms of the balance sheet, even that has improved when it comes to cash this time around. Operating cash flow is up 24% on a YOY basis. However, net debt has increased slightly. That is because of new capex. 9 months retail consumption is also up 17% on a YOY basis. So going with green on Phoenix Mills this time around.
Thank you very much for that. Lots of pharma numbers, but let's focus on Gland Pharma with Ekta.
Well, yes, for Gland Pharma this quarter, it was a good quarter. We had the revenue growth, which was 22.5% better than expectations, margins at 25.7% in line, and profit was better than expectations as well. What led growth was US, which was up 19%. It was up around 5% sequentially. Europe, which was up 54%. India, which was up 32%. The company has said that there are new contracts in the US which are starting to contribute. Cenexi, which is a recent acquisition by the company, the EBITDA margin improved to 2.9%. And growth drivers could be the GLP-1 opportunity for the company in FY27. So expect some green on the stock today.
Okay, all right, Ekta, thanks for that. Well, coming back to Vinny. I think Vinny in green and talking about a lot of stocks in green. Vinny, what about Sigility as well as Eclerx?
Hi, yes, so both of these are expected to be in the green as well today. So Sigility as well as Eclerx. Eclerx is first, I'll talk about the Q3 numbers. Steady revenue growth this time around as well, 6.5% growth there. Growth mainly was led by two important segments. One is the fashion segment that started seeing a pickup, as well as the emerging segment for them. That saw good growth, up by 30% was the emerging segment Q on Q, as well as fashion was also up by 9%, followed by high-tech, BFSI. BFSI a bit muted at 2.1% growth. Now, margins that have remained largely stable to slight bit decline that we're seeing, 25.8% versus 26.9%. So 100 basis point almost contraction there in terms of margins. ACV deal wins muted is what I would call it. 1.2% sequential decline is there, but strong employee addition is what the company has seen coming in for the quarter. Attritions have declined by 19.3% as well on a sequential basis, and top clients continue to account around 10 clients account 63% of the contribution. So we could see a bit of a green here on the screen. Sigility, good set of numbers, very strong performance coming in from the company, beat versus what the analysts were expecting. Revenue growth of around 35-36%. USD growth in terms of revenue was also around 17% sequential growth there. Healthy organic growth is what the company has seen. Management is expecting this momentum to sustain in Q4 FY26. They've also increased their guidance in terms of CC revenue growth from 21% to 22.5% for FY26. So they're expecting this strong growth to continue. 3 clients were added in 9 months FY26 as well. Good performance overall from Sigility.
Okay, all right, Vinny, thanks very much for that. NSDL with Ria now. Ria, morning.
Well, good morning. NSDL has not seen a very strong performance in this quarter. Revenue has declined by roughly 10% on a sequential basis for the company to 360 crores, and this was primarily dragged by a 17% drop in the core depository segment. EBITDA margins also contracted by roughly 214 basis points to 29.8%, with a drop in margins seen in the core depository segment as well. Net profit also saw a decrease of almost 19% on a sequential basis to 89.6 crores. The digital banking segment also saw a revenue downtick, but the EBIT doubled sequentially, although its low 5% margin was insufficient to offset the depository business downtick. Coming to the depository and database management businesses, both of these slumped with a revenue downtick as well as margin compression. So this stock expected to open in the red today.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are L&T, though it's a mixed bag, execution lagged a bit. M&M Financial, Garden Reach Shipbuilders, GE Vernova T&D, Phoenix Mills, Gland Pharma, Sigility, E-Clerx. Stock with negative news flow are SBI Cards and NSDL. Well, let's now go across to where all the action is, the world of commodities. Manisha is still at the India Energy Week. Manisha, fill us in with, what has happened overnight and what you've picked up basis your conversation with so many experts there on the way forward.
Oh, well, absolutely. I'll start with the crude oil prices because we're trading at a 4-month highs onto this one. Well, with the U.S. Warning of a possible military action on Iran, the markets clearly are getting jittery here. Well, that is a major conversation that's happening at the India Energy Week also. Well, if you look at Iran and then when you look at Middle East, the 1/3 of crude comes in from here. And then you have Strait of Hormuz as well, where crude and gas gets passed as well. So if something does escalate here, you are looking at higher crude oil prices. We already are trading at a $68 an ounce, a barrel there. But all action clearly is in case of commodities, and metals are a top priority there. Take a look at the gold prices, $5,600 an ounce. It has been a $200 of a jump up coming in for gold prices. Silver is up 60% in the month of January alone, trading at all-time highs yet again. Copper has gained 2% overnight, trading near all-time highs. Aluminum is trading at 2022 highs. Zinc is trading at a 3-year highs. So everything that you touch in commodities is either trading at multi-year highs or at record highs. The dollar index trading at a 4-year lows. The dollar-denominated commodities definitely doing very, very well.
Okay, all right. Thanks a lot for that, Manisha, and take care of that throat. I think some hot water and various other medication is required. See you later. We'll come back from this short break. We'll have Deepan Mehta of Alexa Equities who will be joining in to help us out with some fundamental stock talk. Stay tuned.